Hey, what's up, guys? This is Carry Trades. I wanted to dig into the indicator I built for the homie BroBoken. It is super, super, super OP'd, and I just wanted to help kind of provide a guide before I kind of threw y'all into the abyss. My mind is a crazy and wild place, and I think this indicator did a good job of trying to summarize a bit of how my brain thinks, and it can be a bit overwhelming for people at times. So I wanted to take a few minutes to kind of break this down really piece by piece and then show you how I use it all together, or at least kind of intend to use it all together, since really I'm about as new to actually functionally using this indicator as y'all are. So there are a number of different concepts and ideas built into this indicator. A lot of things that I like and enjoy and I find very useful. It turns out the homie BroBoken likes using a lot of those things as well. And so this kind of opened up the door to this kind of wild Frankenstein thing that I have now. You combine that with the Golden Goose strategy that Coach Dipka from Kane Capital shared not too long ago, and suddenly you have this kind of whole methodology for identifying high confidence, high quality setups. So, for those who aren't familiar with the Golden Goose strategy, I'm going to very briefly kind of go over the idea of it. So, the idea of the strategy is that you're going to utilize moving averages to identify trend, but also you're going to use them in conjunction with Fibonacci levels to identify timing and location of high confidence setups. And so let me turn on the fibs here too. And so when you get this fast moving average crossing below this medium moving average, you'll see the color of the cloud in the middle change. And that's a feature that you can just leave on, and that's actually how I prefer to use it, just for the sake of clarity. But I know having the lines on there can be really useful. So what happens is the crossovers help identify trend direction, but kind of the kicker to the Golden Goose strategy is that when this medium moving average crosses one of your fib lines, that's the condition for the Golden Goose alert. So, for example, we get this right here where this line, this moving average crosses below this fib line, and that's kind of an indicator not to immediately go short, but to look for a pullback entry to go short. Of course, you can slap the ask if you really want to, if you're truly, truly a degenerate that does not care about blowing up their account. But if you spend a little bit of time, a little bit of diligence, and follow a few rules, you can find some really, really, really great entries. So, as kind of a quick example, knowing the top of this cloud is this fast moving average line, once we got that signal from the Golden Goose, we could set this fast moving average as a potential entry, the medium moving average as a potential limit entry, or fib levels as a potential moving entry. And you see, as we kind of continue to break down, we get a retest of this fib level up through even the fast MA. So you could have gotten filled here or here, and then we proceed to dump back down to the slower fib level, which you can begin to take your profits here, trail your stop on the way down, boom, worst case, you get stopped out right here, solid winner. So that's kind of the idea fundamentally of the Golden Goose strategy. Not going to go into any more of that. This video is going to be long enough. There's plenty of other things to watch about that I can link you to. So first things kind of in this indicator I want to go over are, I'm going to kind of go back to how I had things set up before explaining the Golden Goose. The first thing that I have kind of pulled up here are actually the relevant levels from the BB course. For those of you who have hung out in the Discord for a minute, y'all know that the homie Buller over at Buller Buys is our Papa Keanu's mentor, if you will, and the BB course really is high quality, very good information that can allow new traders an opportunity to get established very quickly with at least some kind of strategy that is simple enough to follow, straightforward enough to understand, and reasonable enough to execute without having, to think there's some kind of technical analysis wizard. So some of the fundamental concepts of the BB course involve charting yesterday's low, yesterday's high, today's low, today's high, and then the pre-market high and low as well. So fresh out of the gate, if you're still new to this and this whole Degen, day trader, golden goose indicator is a little bit too much for you, this really is a great place to be able to start to kind of identify some key levels. And sure enough, this pre-market low was significant previously, and you see how kind of these levels line up a number of different places and how these kind of key levels show themselves over time. So that is something I don't keep on all the time, but it's something that I like using to reference to kind of understand where we're at. It's a good way to get your bearings, especially first thing in the morning. The next thing I want to pull up here is a time frame continuity chart, and this might be something that is kind of strange or new to some of you guys. And I'm going to talk a little bit more about these bar shapes and setups a little bit later in this video. But the idea is that you're going to get an idea of what price action is doing on higher and higher time frames, which adds more and more confluence to your trade and your thesis. So one of the ways that I like to think of these time frames is much like how us retail traders have our favorite stocks that we maybe buy or invest or trade daily, but some that we only touch occasionally. Very similarly, market maker algorithms have kind of their own version of that. So what we can see here is kind of an overview of which algorithms are dominating the time frame. So the color of the box is going to be the color of the bar. You can kind of see these arrows that can be maybe a bit deceptive at first in terms of what they mean. I'll touch on those here in just a second. But if we just want like a really, really, really quick understanding of what's going on, and saying this out loud, I might make these signals, these inside bar and arrow things, I might make those an option to turn on and off for those who don't want to deal with it. But you can see, okay, cool. Bulls are in control here on the 30-minute, bears on the 60, bears on the 120, which is the 2-hour, bulls on the 240, which is the 4-hour, bears on the daily, bears on the weekly, bears on the monthly, right? So if we're trading this, we can say, okay, cool. I can long moves to the upside, but there's a lot of bearish influence going on. So I'm not really going to look for massive moves up. In fact, if I'm taking a long trade, when the table just hide price action. If this is what the table looks like, any kind of long is a scalp. I'm looking to get in and out real quickly, take my profits, and get ready to flip back short. Any long scalp I'm taking here is to pad my pockets to get ready to short that pop once I think it's ready to reverse. So again, this by itself is a very powerful and useful tool. And down here, you can change your time frame. to whatever you want. I need to come and maybe add a couple more, but so far, I think just up to the 1 month is necessary. I don't know if the quarterly or yearly bars will really make that much of a difference right now. Okay, so these arrows, IB, the arrows that we saw there, those stand for inside bars. You'll see OB, which stands for outside bars, and the arrows are directional bars. And so, I'm going to go pull that back up because I'm referencing something you guys can't look at, and that sucks. So I'm pulling up this other thing now because this information is relevant here too. So IB is inside bar, OB is outside bar, down is what's referred to in the strat as a 2 or a directional bar. And what this means, this doesn't mean that it's a red bar because the whole block is red, but this is a down because it broke the lower extreme of the previous candle. So you can get something that is a down where this whole block is green because we broke the downside, we broke the underside, if this was, say, our candle, and actually, this is an example of one. We came down, we broke underneath the bottom extreme, but then we came back up. Now, if this flipped green as a bullish bar, we would get the green background with the down arrow. So inside bar, outside bar, or directional bar. Those are some concepts from the strat. If you have questions about it, ask me, ask Dodge, ask Google. But the next thing I want to go into are these background highlight things. And if you've paid attention to some of the stuff I like to do for a little bit now, I've talked about one of the people that I also consider a very, very, very useful resource on FinTwit. His name is Rich. He is the guy behind Trading Wars, and he's the one who really introduced me to what I call objective price analysis. And that is the strat. That's identifying inside bars, directional bars, and outside bars. And that's kind of what these backgrounds show. There's combinations of these inside and outside bars that lend themselves to particularly explosive moves with also easily recognizable entry points. So when you get these background highlights inside of the price action, the yellow is indicative of what's called a holy grail. A holy grail is when you get an outside bar. An outside bar is when you break the high and the low of the previous bar, right? An inside bar, where the high and the low is inside of the range of the previous bar. So this is called a holy grail setup, and often when you you'll short the break of the downside of the inside bar and you'll long the top. So you could have done that. You could have made a little bit of a green, and then as soon as it broke out of the top, you could have gone long and made a nice play there too. The opposite of a holy grail is called the nirvana pattern, and so that's when you get an inside bar followed by an outside bar. Same rules apply. You long over the top, short over the bottom of that second bar. Then you start getting into things that are a little bit more intricate. He's got one that he likes to call the Ragnarok, and that's where you get an inside bar into I was getting it backwards. It's an outside bar, inside bar, and then an outside bar. So it's kind of like it's almost like the 3-bar pattern that you'll see us talk about in the Discord every now and then that Bowler is really big on. And so you can come in here and turn all those on. You can flag your inside bars and outside bars. So one of the things about this indicator too, it's got a lot of shit in it. And so whenever you make changes, it just takes a second to load. So be patient with it. But if you're new to the inside bars and outside bars, this can be really helpful to identify them, as well as these additional patterns here too. So, all right, next I'm going to touch on the volume profile that I have on here. And now I'm going to get rid of the time frame continuity. Okay, so this is actually one of my favorite things that we have on here. So one, you're going to get this volume profile that is just like chef's kiss. Everything I could ever want from a volume profile is in this thing. So, for those who aren't familiar with volume profile, you're going to highlight what's called the value area. One standard deviation above and below this point of control. It's going to give you about 68% of all the volume traded in the price range that we've seen for the day, or at least for the look back period. Look back period is how many bars back on the time frame this calculates. This point of control, this is your average volume level. Above it, bulls are in control. Below it, bears are in control. It becomes a nice level of support or resistance. Lots of ways you can use it, as are the bounds of the value area, you'll find. So that's why you got the values of these over here. You can shift these over here if you want. I found that to be very, very cluttered, so I moved them over here. This part on the right-hand side is amazing. It's going to tell you of these volume bars how much more dominant bulls might have been, how much more dominant bears might have been, if it was a pretty even match, right? You get that here with the yellow and blue bars too. The yellow bars are going to be your bear volume. The blue bars are going to be your bull volume. But I prefer this. I just like how this shows for getting that piece of information. Volume profile, for those who aren't super familiar with it, like I said, is the amount of shares traded at that particular price. So this is really useful because it helps you identify where big money is sitting. Most of the orders are getting filled up here. This is probably going to be, some kind of tough resistance to break or support to go under should you get under it. Now, every time we pushed above it, we flushed, right? Every time we pushed over this average level, the bulls would get greedy and bears would flush them out of it. So yeah, another incredibly useful tool. Down here is this is your regular volume histogram that you're used to, just flipped upside down. Hopefully that doesn't bother you too much. If it does, you can stick it up above. Again, I just found that to kind of clutter things. So if it is weird with it being oriented upside down, this moving average line, this blue line here, is a really good tool to be able to utilize like the relative volume. And so when you're down here, below this moving average line, you've got more volume in the move than recent history. So this is kind of like your assist if this is kind of a strange layout for you. But again, if you want to, you can always come in here. You scroll on down to the volume profile section, and you hit placement top, and you wait a couple of seconds because this is 1,000 lines of code, and boom, there you go. It's up there. Cool. So we're getting into the end of this, I promise. We're almost done. So now I'm going to get into some of the crux of what the Golden Goose covers. So I've got this moving average and VWAP section. And actually, it says EMA. I need to change that. Let's carry over from something else. But you have all these other moving averages available. Volume weighted moving average, whole moving average, whatever. You can change things. It's going to adjust whatever kind of floats your boat. Also, you'll see I have this saved as 8 for me, whereas it is 9 on the actual publication. I prefer to use 8 versus 9. It's a semantical difference, really, but I like to keep all of my numbers fib numbers. That's why this is 55 and not 50. That's why this is 233 and not 200. We can talk about fibs all day. In fact, we're going to talk about fibs down here a little bit. But technically, the golden goose strategy calls for this to be 9. I like to use 8. You can enable your fast moving average if you want to see that. The cloud here is going to give you the relevant crossover information that you need. But I know people like to see that line too. So those are both there. I'm going to keep this medium one on because it's helpful for explaining the golden goose strategy. But you've also got this slow moving average and what I call the trend moving average. These you can set if you want to make this also 21 and maybe move it to like a whole moving average so that you've got these being the same but just kind of like two different flavors, two different takes. That's what it's here for. This is meant to make your life easier. If you think that these changing colors when they cross over is silly, you can uncheck that box and your lame, no fun having ass can get this as yellow. Also, I've got VWAP in here. I really like VWAP. The volume weighted average price, I think, is significant, particularly during intraday trading because it shows you how valid any given move is. And I'm going to nuke this for just a second for clarity. You can see you could have handled this chop really well that we had on Friday by recognizing that, we're moving up, but the VWAP isn't moving up, which means the volume doesn't support this move. So you could have anticipated it coming back to test VWAP, and VWAP wasn't moving up nearly as aggressively as price was, right? You get that all day throughout the entire price action, right? So VWAP can be really, really, really powerful. And this is a fancy VWAP. You can anchor it to the week. Normally, VWAP is based exclusively on intraday trading, but I wanted to do more than that because y'all deserve that. And so you can literally change it to last earnings, dividend, split, anchored over the century. Like, this is nuts. So it's going to give you the volume weighted average price anchored in this case over the last quarter. So you see we're very far below that. So, there could be good reason that we shoot up and retest this VWAP sometime here soon. Keanu has a principle that he likes to follow, and that involves the 200 EMA. And this is one of the only moving average things that is locked in because it is his thing. This doesn't change. So when you have price action between VWAP and the 200 MA, Keanu calls that his no zone. That's don't touch, stay away. Stranger danger. We're not going in here. We're not going in here. So show a little bit of love to the homie. Immortalize him in some of his incredibly valuable and useful techniques. I wanted to have a couple of buttons for him in here. And again, the VWAP is going to change upon this anchor period should you so choose. And so you get, it's very, very, very powerful. So you don't always have to have that checked. You can turn these off. And in fact, you can just do this. And again, you'll just get the cloud here in just a second. Yellow is the color for this one too. So don't get these confused if you're a weenie. Cool. So finally, last piece of this is going to be our fibs. So I've got a couple of different fibs and things programmed in here. There's going to be this fixed Fibonacci, which is going to be based upon this time frame. So, you can change it. I got to add the 1 hour. Somehow I missed that one. But so you can change it depending on kind of how far you're wanting to drill down. You can keep it set to something like the weekly if you're looking for kind of like a really general temperature to take on the market. And you can come in here and you can add these different fib levels that you so choose. There's also this reverse button. So if you decide that you want to see what the bare equivalent of this bull fib looks like, you click one box and it'll flip it for you. It can be helpful when you got these extended target fibs. Another thing, because I know some people are going to ask about it, I really tried to put as many of these in here as I could, but TradingView has a limit on the number of outputs you could have. So if you've got the 0.68, right, man, Carrie, I need the 1.68. Boom. Literally tick that up to 1, and here in just a second, we'll see this line pop. Yep, boom, there it goes. Where is it? Yeah, there it is. Right, so these other fib targets, should you need to get to them, are very easily accessible, very quickly, and within the amount of time that you would need to get at it. So one thing worth noting, the Golden Goose crossovers are only going to be tied to this fixed Fibonacci level. This fixed Fibonacci is also tied to this custom fib level. I'm going to talk about that in just a second. But either this time frame or these fib levels are going to determine the Golden Goose signals. This dynamic Fibonacci is more so something to use during intraday trading, and let me show you why. So I'm going to flip this back to the daily, actually, even though it defaults to the weekly. And what makes this the dynamic fib is that all of your price action will be contained within the top and bottom fib level. As you push above previous highs and down below previous lows, the extreme on this and thus the corresponding fib levels in between will change. So you won't ever need this extended fib for the dynamic fibs, though it will still plot, just because that would have been really hard to code. One of the things, too, that's worth noting is the colors will all stay the same for the respective fibs between the two. You can plot both at the same time, and you'll see the top and bottom are gray, right? The levels are all the same color. There's a method to the madness, I promise. So one, you can adjust the difference between them by adjusting the thickness of the lines, and that makes it a little bit more obvious to tell what's what. But the reason I have them like this, and I got another typo here, is because you get confluence. You can see where these levels line up on the different time frames, and it gives you more information to kind of understand how strong of a support or resistance a certain fib level might be. If you get overlap of the weekly and the daily fib level, you're probably going to have, again, a number of algos piling up there correspondingly. So I'm going to put that away. And I'm going to show you this custom fib level. So part of the Golden Goose strategy, at least when Coach Dipka was kind of talking about it, it required a view of the higher time frame and drawing fibs on the higher time frame. And sometimes you're not going to be able to exactly nail the top and bottom of that wider time frame by just setting this fixed fib to the weekly or the daily or whatever. If you come in here and check this box, it nullifies this time frame, and it allows you to use these levels to decide your fibs. So let's say I wanted to do the fib from the top in January to the bottom of this sell-off before we got this big bounce, right? So our starting fib is going to be the top here. That's 48.2160. And this bottom fib right over here is going to be 4106.2. Cool. So we're going to give that just a second to bake. And boom. Lines get drawn. If you drew this fib when we bottomed here in February, you pretty much would have caught the perfect top a month later, right here at the 238 fib retracement, right? So you can now take these custom fibs, and when we enable the golden goose, what we'll see is we get these crossover points, right? So when the top of this cloud crosses over underneath this fib level, we get our golden goose indicator. From there, we look for some kind of pullback entry. Boom, we get one right in here into the cloud, sells off, we trail our stops, it's a winner, right? We get one right here, but the trend is kind of trailing off. You see the cloud thinning out, and so that's why you don't just kind of arbitrarily slap the ask. Now, as a testament to the strategy, getting the signal inside of this cloud right next to this fib, if you really wanted to just kind of stick it to people and play a scalp, you could set your limit order sell here right at this fib. You would have tagged this wick. Boom, you get out right here on ES, MES. You know, if you're playing futures, if you get that right there at, call it 42.61, and you get out at 42.59, I mean, that's lunch money right there. If you're playing a couple of contracts, quick little scalp there, you're making some decent money. Yeah. If you get in here and take profits, that's 42.60 down to, call that 4,200. Yeah, 60 points, $5 a point. Yeah, you're talking $300 off of that scalp. I keep forgetting this is the 4-hour chart. So even on these smaller moves that we're seeing on these higher time frames, let me zoom in a little bit further so we can kind of see something more substantial, something that looks like a trade we might do during the day. Right, boom, here's one. This one was a bit more tough because we didn't get a good retrace until like the move was almost played out. So part of these two, if you want to play the goose strategy, sometimes you got to be willing to be a little brash and set a limit short just below the low of your alert bar, right? So again, we get this alert on this bar, right? We set a limit order sell here. We set a limit order sell here, right? Those where the two MAs are. And then we set a limit order here for the fib level. And then we set a limit order here to sell, underneath the low of the alert bar. We don't catch any of these fills, but we do catch the break of the low, and we can literally ride this all the way down, right? We get another, even if we take that more aggressive entry, 42.28, we ride it down even down to here. That's, another 75 points times 5. That's, you're done. You're done for the day. This is in here. It's about 2 o'clock. Boom. You're done in an hour, right? So the point of putting all of this stuff together when I really could simplify, there is a version of this indicator that is just these two things with the time frame continuity thing. Actually, the time frame continuity isn't on that one. But The reason I threw all this together is because once you get this Goose signal, you're really one more good trading decision away from having a really high quality setup. And so if you're able to come in and say, okay, cool, well, I just got a Goose, and let's turn on the trading wars patterns. Maybe we'll see like right. So here's a setup right here, right? So we were already ready to kind of trigger some direction. We were getting right. So this is our Nirvana pattern, right? Inside bar, outside bar. So if we were just playing this price action setup, we're ready to go short here below the break of this bar. Then we get the golden goose confirmation here. And so, you could reasonably go short here right as the signal gives itself. I know I just said not to do that, but we already have prior confluence here, right? Maybe you hate that though. So let's come over to volume profile and let's see if there's anything that gives us some confirmation there. Now this is kind of tough because we're right at the beginning of the look back period and we traded a bunch below that, but we can see that there's not a ton of volume getting traded in this range. At least, hindsight is 2020. Of course, Captain Hindsight never loses a trade. But we can see how we've got lowering volume off of price action from what we're seeing in here. So there's one additional layer of confluence that you can use. And so you just figure out what works and what's working for you. Maybe you get short here and all the time frames were lining up short. Maybe you flick on the BB levels and we just broke yesterday's high to the downside, right? That's another reason to do that, to take the short, right? So got all these things kind of built in to help give you an idea of what's going on, how price action is moving, where you can get confirmation and confluence in being able to enter a high probability setup. But at the same time, these are more powerful than your average versions of these indicators, especially with how they work together. And this is all accessible immediately at your fingertips right here. Part of my goal is for someone to fire this up and go, oh, I don't need my TradingView Premium account anymore because this has 10 indicators in it and it takes up one slot. I have room to put, in RSI, a CCI, whatever other kind of momentum thing I want to look at here. I've got a couple different volume things already built into here, so I don't really need to pull up a volume. But that's the thing. We haven't even cracked into a MACD or an RSI or anything like that people like to use for identifying momentum. These are all just purely price action and some volume related stuff in the indicators that we're getting these signals from. And so my hope is that it can be educational for those who are new to a lot of these concepts, and it can help kind of handhold a little bit to help people identify kind of what these different tools display and the kind of information that they provide, while also assisting more seasoned traders who know about fibs, who know about moving average crosses, who know about volume divergences and things like that, but just want to be able to quickly pull up, oh man, I wonder where we're at in, the volume profile, where the point of control is. You click one box and then, you wait 10, 15 seconds and you've got all this information. Who's in charge, how much volume there is, where the volume value area is, what's going on up here with volume, bar to bar. And then you go, okay, cool. Like point of control is there. Maybe I draw a little line there that extends, right? Like a little ray or something like that. And then I turn it back off. And I go back to watching price action and whatever else makes me feel comfortable. So I know this has been a whole lot. This is a lot more than I was anticipating doing. I'm sure it's a lot more than you were anticipating. Um, but please, this isn't meant to be an all buttons in all the time kind of indicator. Is really what I'm getting to. This is having your cake and eating it too. This is getting what you want to watch always, but also being able to quickly dabble and check things that you can rely on, or that you normally like to use and check, uh, without having to over commit and mess a bunch of stuff up, in your charting already. So if you have questions, please do not hesitate to reach out. You guys know I'm accessible. Hit me up through Twitter. Hit me up on Discord. Uh, this is a really, really, really powerful set of tools that I put together, and I just want to see you guys crush it every single day, with stuff like this. And plus, how funny is it that there's the actual goose emoji? I mean, come on. It's a great joke. It's a great joke. Okay, cool. That's plenty. Love you guys. Stay green.